So we have something urgent we need to talk about today in regards to SoFi stock. Now look, I know SoFi reported great earnings, but the stock has just dumped since those earnings, which I warned you would happen. But now with the wall of cascading downgrades and everyone suddenly being bearish on SoFi stock, it is urgent that you understand exactly what is going on and how to avoid losing a lot of money, guys, because I've already seen it starting to happen to some folks. So let's break it all down so hopefully we can save you from a big loss with everything we're going to talk about today. So make sure you like the video if you like getting the truth without the hype and getting all the smoke blowing up your backside and all that good stuff like that. If you want the truth, make sure you like the video here. And hey, I'm just trying to be honest here, guys. This is going to be painful for a few of you guys to hear, but you got to understand it. That's the urgency with what we're talking about today. You've got to understand these points. Because when you do, you will understand exactly what is going on and exactly what to do more importantly, which is key to investing during times like this. So point number one is to ignore the analyst. Look, guys, they are told what to do. It has absolutely zero to do with actual analysis, and it has everything to do with doing what their boss tells them to do. There's a variety of reasons behind that, but the bottom line is they're not doing analysis, they're doing what they're told, and you have to understand that fact. And the other piece that kind of cues you into what's going on, and I'm sure you guys have noticed it, and if you haven't, you will notice it, is that they're always chasing momentum in the end, which means the trades are already on by the time they get there, and they're setting up the next trade. So you'll notice that, hey, when the stock's going up, now magically they recommend it, it's magically a buy, and they magically increase their price target, and then of course vice versa. When a stock is falling, they all just kind of seem to magically go, oh, hey, it's now all of a sudden, I know my price target 6 months ago was, double this price, but now I think it's even lower than it was before. It's utterly ridiculous. They're just chasing momentum. They're just doing a lot of other things that their bosses are telling them to do to maximize their own trades, their own whatever games they're playing. It has zero to do with actual analysis of the stock. So why anybody ever puts this much inkling into anything in terms of analyst upgrades or downgrades is just beyond me, because I understand exactly what's going on there. I understand the exact game, and so does everyone on Wall Street. Even if it seems like the stocks move on it, they may be, but there's a trader playing a trading game that knows that that analysis is complete BS, but they're going to make a trade off of it anyways to make a few bucks. I literally listen to no analyst out there, bullish or bearish, some of the better ones, some of the worst ones. I listen to none of them. I listen to the earnings call because that is where the actual truth is in regards to your stocks, which we've been listening to earnings calls and breaking them down in real time in my group, which is on sale right now, especially that monthly membership, because that monthly membership is going away shortly. Basically, the stock mastery course that's been revamped is getting ready to relaunch. It's completely different there. And so we're going to kind of move to annual memberships after that for a while. So the monthly memberships, once they're gone, they're gone. So make sure you check out the pinned comment down there, see if a membership's right for you, and grab your spot before the Valentine's sale ends and the monthly memberships disappear. So point number two, Wall Street doesn't care about your catalyst. So stock catalysts kind of fall into two different categories, and there's more than this, but I'm going to break it down to the main two. And the first one is it's not actually a catalyst. So kind of think of things like whenever we talk about Tesla stock, there's a lot of things that are 10 years into the future, but a lot of folks think they should be catalysts today. They're not. They're not a catalyst for the stock at all. And so are things that don't actually add to the bottom line. I'm sorry, something that may be $1 trillion opportunity doesn't automatically add $1 trillion to the bottom line, especially if it's a decade away or something like that. Those are not actual catalysts. So you got to kind of keep that in mind. A lot of things that people think are catalysts are not catalysts. And then the second piece of that is Wall Street doesn't care about your catalyst. That is the second category. Wall Street doesn't care. That's kind of the whole point in my price target being low on SoFi, because I knew it didn't matter. And trust me, turning profitable should be a great catalyst for a stock, but yet we have seen it over and over and over again. Just look at Palantir last year. It happens all the time where it's something that should be a great catalyst isn't a catalyst, and instead Wall Street beats it down anyways. Now sure, there are other times when a catalyst like that does happen and the stock does go up. But in general, Wall Street doesn't care. It's not like it's, hey, if you do this, then it's going to send the stock price up. It just doesn't tend to work out that way. And unfortunately, especially with retail favorite, high growth type companies, this is just the way Wall Street's been treating them right now. And it's not unusual. I've seen catalysts for great stocks like Apple. not move the needle at all, and Wall Street actually trades it down as well. So it's not like that just applies to our stocks. It applies to stocks across the board. Basically, in the short term, what I can tell you about SoFi is Wall Street is not buying what they're doing right now. Very, very familiar and very similar to what happened with Palantir. They weren't buying it up front. Now, after the next quarter after that, Wall Street started buying in. And of course, the quarter after that, Wall Street has been buying in more and more into that story. It takes time. But for right now, they're not buying what SoFi is lying down, or maybe there's another reason, and that leads me to point number 3, which point number 3 is it a bank stock or is it fintech? Now, guys, let me be very clear and upfront with you right now. We do not determine this. We do not determine whether or not it's valued at a bank stock or is it valued like fintech. Wall Street does. We can like it, we can hate it, we can think that's wrong, whatever the case is, it doesn't matter. That is the bottom line. They determine what multiple they're going to assign. Are they going to assign a bank multiple or are they going to assign a fintech multiple? And that is that jostling, it doesn't happen overnight. It's not like magically SoFi turns profitable and then they assign a multiple and then it runs. That happens over the course of time, sometimes multiple quarters, sometimes multiple years, depending upon the stock. Now, if they decide it's more of a traditional bank stock, we are going to be under $10 for a very long time. And obviously the bull case for SoFi, I won't say it falls apart, but it definitely changes the math a lot. But on the flip side, if they decide it's fintech, we're going to see $20 pretty quickly here, guys. And that right there, it's pretty wide range, I know. But again, that is part of the stock market. That is part of turning profitable. And then being kind of like SoFi is where it's really, really hard. I can't say it's 100% fintech. I'm also not going to go there and say it's 100% a traditional bank either, because it's not. To me, it's right in the middle. I kind of think that's where the multiple is going to fall. It's not like this is the 1980s where they had a very, very hard time with tech multiples, trying to figure out how do you mix in a tech multiple with an industrial multiple and some stuff like that. We've had this before. We've had other companies that have kind of stood out as something different than, one or the other. And Wall Street's kind of created their own multiple, or it's just kind of fallen to a particular multiple in between. So that right there is what I think is going to happen with this stock. But remember, my opinion means nothing. Zero, zip. It all comes down to Wall Street, and that's a reality that I have to live with, and you guys have to live with too. So point number 4, this is the perfect setup for long-term investors. Great performance on earnings, and Wall Street beats it down. This is the exact scenario you want as a long-term buy and hold investor. And if you don't believe me, look at Meta, look at Palantir, look at Google, look at Amazon, look at Nvidia, look at AMD, look at all those great companies who had good to great earnings, and Wall Street, for whatever reason, not just wanted to beat them down to 52-week lows. They beat them down to like 2017 price levels and such, a year or two ago. So it's not like this is unusual or it doesn't happen. Obviously, with SoFi, it's kind of the here and the now. But this is something that happens periodically with all stocks. And this is where us as long-term investors, if we can buy the fear and be okay with being down in the short term, you can make a lot of money in the long term. And if you didn't believe me before, hopefully the past year run on a stock like a Meta on one extreme and a Palantir on the other extreme there in terms of, obviously Meta's a, kind of a mega cap, not old, not a legacy stock, but definitely an older stock. Obviously Palantir, pretty new stock, but we saw the same exact thing happen to both stocks where Wall Street just beat them down for no good reason. And then, of course, with good earnings and great earnings, they continued to give them actual respect and started moving into those stocks. And obviously with Meta, it's just been a crazy run there. It is the perfect setup for you if you're a believer in SoFi and you're a long-term buy and hold investor. It is the perfect setup, which leads me perfectly to number 5, and that is share count matters far more than average. We've been talking about this in my group now for a long time, especially coming off those 2022 lows where everybody got used to, basically buying SoFi in the 4s, and all of a sudden now you've got to pay $5 or $6 for it. Man, that seems so hard because you're paying 50% more for a stock that you just got for $4 or so just a month or two earlier in some cases with SoFi. Would you rather own 1,000 shares at $4 per share, which is an incredible price, or would you rather own 10,000 shares at $6 or $7 per share? Especially if we think it's a $20 stock in the future, $25 stock, whatever number you have pegged for it in the future out there, $50, doesn't matter, whatever you have out there. Would you rather own 10,000 shares at $6, $7, $8? Or would you rather own only 1,000 shares at $4? There's no question in my mind, I want the 10,000 shares at the higher average. No doubt in my mind. And guess what, guys? Times like right now are exactly how you build out your share count. You don't need to do anything fancy, just a DCA into the stock, every paycheck, however you choose to DCA, doesn't matter. Just simply DCAing into the stock when Wall Street gets them and beats it down is the best way to do it, because when it decides to run, you will feel so much better that you added so many shares, and your average maybe being, $7 instead of $4 like you had originally will make you feel a lot better about the stock in the end, especially if it goes where we think it's going to go. And remember to take advantage of the Valentine's Day sale right now for my group before those monthly memberships go away with the release of the new stock course. But you also get my buy and sell alerts in real time. You get to take 5 courses for free. You get to use our stock analyzer tool for free. You get to be a part of the best 6, 7, and 8-figure Discord out there. We have live events coming to the group all the time. We have so much more that's actually coming as well to the group. Can't talk about them yet, but they're coming. So just make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.